Welcome back to the Modern Investing channel, and today we are valuing Proterra, which is the leading electric vehicle maker for buses and heavy-duty transportation vehicles. It is an attractive story because it benefits from the ongoing electric vehicle revolution, as well as it doesn't have Tesla as competitor since Proterra focuses on the heavy-duty vehicles. Without further ado, let's explore what Proterra does and let's value the business. Proterra is an electric vehicle company and it has three business areas. Proterra Power, which is the side of the business engaged in converting conventional vehicles to EVs. They are the ones designing and implementing battery packs and drivetrains. Proterra Transit, which is a manufacturer of electric buses from scratch. And Proterra Energy, which is primarily engaging in charging infrastructure. Proterra has a fertile market in front of itself, with the bus market predicted to grow at a compounded growth rate of 50% per year for the next years. In 2040, 100% of the North American buses fleet need to be 0% emission, and that gives Proterra an enormous market to play with. Certainly, Proterra growth will be more likely to be limited by its own growth limitation rather than by addressable market itself, which is a great luxury to have as a company. Right now, Proterra has more than 600 vehicles on the road, spread across the US. One thing I really like about this company is that they are the clear leader in their niche. They are miles away of competition by having already electric vehicles on the road and manufacture capabilities, charging stations, as well as it doesn't have Tesla as competitor since Proterra focus on the heavy-duty vehicles niche. I like that. I wouldn't want a potential investment of mine to be a competitor of Tesla. So if we spend just an extra minute to reiterate on Proterra business units, we have Proterra Powered, where customers come to Proterra and say, I have this vehicle, can you make it electric? And Proterra will design the battery packs and all the other configurations to make it happen. For example, some time ago, Proterra signed a deal with Komatsu to design electric excavators. The other business unit is Proterra Transit, which is the most straightforward to understand. It's manufacturing of electric buses from scratch. Proterra has its production facilities where it can do that, and the buses it makes takes the form of, for example, of this Proterra ZX5 bus. Finally, Proterra Energy has a smart charging infrastructure that can fit charging needs for smaller charging stations to heavy-duty charging. This assures that customers get both the electric vehicle it needs and also the appropriate charging infrastructure. I think the business narrative behind Proterra is very compelling and exciting. But as with all the possible investments, the big question is, does the valuation and returns justify the investment? To answer that question, we will value Proterra with this four-step valuation. First, we will identify what revenue Proterra will bring in 2025. We will then predict what the EBITDA margins will be in 2025. EBITDA stands for earnings before interest, taxes, depreciations, and amortization, which is a way to measure the company profitability. Then we will calculate the predicted enterprise value of the business in year 2025. And finally, data will allow us to calculate the upside potential of the investment. We are very lucky because the management has already given us a direction of how the revenues and EBITDA margins will be in 2025. This was a prediction made some 2 years ago, and they predicted that Proterra will reach 2.5 billion in revenues in 2025, with 539 million in EBITDA, giving it an EBITDA margin of 21%. That's great. We have the two important numbers that we need for the valuation calculations. But the big question is, do we believe that the management will be able to deliver on these numbers? Since these predictions was made 2 years ago, let's see whether the management has been realistic with their 2020 and 2021 predictions. In green, I have highlighted the actual numbers they delivered from the annual reports. We can see that in terms of revenues, they predicted that they will achieve 246 million in 2021, and they actually achieved 243 million. That's very, very close. If we look at the gross margins though, they were close in 2020 when they have predicted 4% and achieved 3.8%, but they missed badly in 2021 when they predicted 4% and achieved 0.8%. For EBITDA, they lost much more than they had predicted, like more than double in 2021. And same story goes for the free cash flow. So what we see here is that they are keeping up very much in line with the predicted revenue growth, but the profitability is deviating from expectations. So I decided that when I will compute the valuation of Proterra, I will stick to the $2.5 billion in revenue in 2025, as per their estimates. But when it comes to EBITDA profits, I will give it a much wider range of estimation, allowing for them to miss big times on the EBITDA margins. The big question at this point is how much will the EBITDA margins deviate from management expectations? Well, if we look at the broader sector of commercial vehicle, you can see that the EBITDA margin has fluctuated between the 5 to 9% range most of the time. And as a reference, Proterra estimated their EBITDA margins to be 21% in 2025. Since the difference is so big, I will make two distinct valuations. One with a margin close to the 21% as management expectation, and another one with a more conservative margin, between 5 and 9%, to reflect on the management missing big times. One last thing before we compute the calculations. We need to estimate what will be the enterprise value to EBITDA multiple for Proterra in 2025. In simple terms, this is a manifestation of how excited will investors be about Proterra in 2025. We can see that the EV to EBITDA multiple for the commercial vehicle group range from a low of 5 times multiples to a high of 10 times multiples, with some peaks of 15 times multiples. Great, now we have a reference point. I ran 1000 Monte Carlo simulations to find Proterra value in 2025 and how much return on investment that we could expect in these 3 years. As you can see, I made two scenarios. One in which we believe the management team. Here, the important variable is that they will need to achieve a 15 to 21% EBITDA margins in 2025. And I set the enterprise value to EBITDA multiple to be between 5 and 15 in year 2025. In the conservative scenario instead, I expect the management to miss big times on profitability and reach a margin of only 5 to 9%. That would represent the commercial vehicle sector, and the multiple to be between 5 and 10. On the x-axis there is the return on investment, and on the y-axis there is the probability. As you can see, the management scenario would lead to an absolute fantastic return of 300%, which means quadrupling our initial investment, with a tiny probability that it will lead to as little as 67% return or as high as 500+% return. The conservative scenario instead would lead to a mean return of 14%, so a totally different ballpark. But I must say that I find these results attractive, because I like to always think about the worst case scenario and then leave the optionality for the upside. These numbers tell me that if management misses big, I am still going to get an average return of 14% in 3 years, which is not great by any means. It is probably going to underperform the S&P 500, but is not absolutely terrible either. And from that big miss scenario, I have the chance to multiply the investment big times if the management instead achieves its goals. 300% return in 3 years would be absolutely amazing. And in the middle, you have all the nuances in between. Only doubling the investment in 3 years would be still a fantastic investment and would beat the S&P 500 big times. In conclusion, I'm not going to hide that I like this company. It is in an industry with a strong tailwinds and it plays in a niche with little competition. I am skeptical on the management delivering on their target profitability, but as we have calculated, the company is cheap enough that they can miss to some degree and still be a great investment. Worth mentioning is that as compared to their estimates from a couple of years ago, they have proven to be indeed on track to deliver on the 2.5 billion in revenue in 2025. The valuation is attractive, and it is one investment that I like because the downside potential is limited and the upside is big. As a disclaimer, I do own some shares of Proterra as a small part of my portfolio. Let me know in the comments below your opinion on Proterra or its competitors, and don't forget to click the like. Have a great day. Before we go, I must remind you that I'm not a financial advisor and this content is not financial advice. It's just my opinion and you should do your own due diligence before investing in any product. Have a great day.